Hello, and welcome to Pro Trader Strategies Market Commentary for Monday, March the 21st. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies and hope that you implement them in your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, just a little bit of economic data coming out this morning. We had existing home sales come in at 5.08 million units and was expected at 5.32 million units. So a little bit lower than expected. Some people are trying to put some limelight around that, but all in all, it's pretty dismal on that front, despite the fact that there should be a little bit of fear in the market that interest rates could rise, that you would think that they would be getting off the porch and going out and look for a new house or lock in those rates lower. So we'll have to see how that really works out. That was really back from February. On to the markets right now. As you can see, NASDAQ up just slightly right now, up about 14 points. Overall market just kind of in line with the previous several days. As you can see, we're kind of starting to top out right here. So not really anything robust about this market at all. Now onto the E-mini S&Ps, as you can see here, /ES, up about 2 points right now, a little bit higher than made a newer high than on Friday, but still kind of a pretty tight range. Here's the breakdown on the 15-minute chart. As you can see, it's been pretty much all over the place, and this print was printed overnight. So on the day session, it hasn't really printed the highs of Friday. Market could look to try and cover that high print though today. So keep that on the docket to see if that happens. On to some trades that I've done. Friday we did a webinar on gearing up for the earnings cycle, this next earnings cycle coming up in a little over a month or so. So right now is a great time to get in there, especially with the extreme low implied volatility. As you can see, Macy's here, which is ticker symbol M, at the lows it usually sees. Going into those earnings, you'll see this kind of start to ramp up. As you can see, it ramped up in the previous earnings cycle. So that's what we're trying to play for, is that expansion in volatility. If you watch many of my webinars, you know that I like to sell premium and watch that volatility contract. When there's really no volatility in the market for the most part, that's the time where you want to get in there and buy volatility in a sense. So check out ProTraderStrategies.com and find out all the rules that I talked about for this kind of particular setup for the earnings trade. But I talked about it and decided to put on 3 of them and implemented them this morning after talking to everybody in the webinar. And it's great because some of the ones that I used are some of the ones that the participants threw out there. Hey, take a look at IWM, for instance, and ended up putting that on, which we'll talk here in a little bit. But with Macy's, I have on the April-May 42.5 put calendar, and I paid 88 cents for that. So I'm short the April 42 puts and then long the longer duration May 42 puts. So that's what creates that put calendar. So what I'm hoping to see happen is the expansion in volatility heading into that earnings cycle. So that will make my long puts worth a little bit more than what I ended up having to pay for them. So, and I used the short April puts to help finance that, if you will. So I didn't have to pay out full boat for those long puts. So that's what I have on there. So hoping to see this stay at least sideways and then sell-off going into that earnings cycle, or just continue really to go sideways, but have that volatility expand and help my premiums inflate a little. On to IBM. IBM is one of the ones, like I said, that the participants threw out there for me, and it came pretty close to fitting all of the parameters. I usually like to get pay out less than $1 for these strategies, but it was a really good one, and I decided to go ahead and put it in there. So I did. I have on the April 4 weekly with the April 1 weeklies and the April 4 weeklies and the 145 put calendar. So I'm short the April 1 cycle and long the April 4 cycle. So that altogether, I ended up paying $1.34 for that. So the same mantra in this, that I'd like to see it continue to rally or trade sideways, and then heading into that binary event of the earnings, we get that volatility expansion and hopefully see this market come off just a little bit. On to McDonald's. Let's put in McDonald's here. McDonald's is another one, same idea. I have on the April 1, April 4, 122 put calendar. So with McDonald's being near the highs, I'm looking at this with like maybe McDonald's is going to try and push up and hit that historical high there, and then coming towards those earnings season, maybe a little bit of the love for the all-day breakfast might start wearing off. That could hurt their projections, and maybe I'll see a bit of a pullback here in McDonald's heading into those earnings season, or into the earnings cycle, with the thought that, hey, we're at all-time highs, time to take a little bit off the table, and maybe we'll see some pullback in that. So with the April 1, April 4, 122 put calendar, I paid 70 cents for that. So again, looking for that expansion and volatility. Now, because the March contracts have rolled off, there's some several different stocks that I just let roll off, and because they were at a max loss, so there was no real urgency to get out of those, just in case something might happen like on that last Friday at the last minute where there should be some covering on some of those. Didn't happen, so I had to take the max loss on several of them. ADM, Caterpillar, CMI, IWM, POT, Potash, and the Qs. So those are some of those that I've had in my portfolio for quite some time, and when they become a max loss on a defined risk strategy, I usually will just leave that on there and let that go off as a max loss, which is what I did in those. So that's all I have to talk about for those. Friday's webinar coming up is going to be a really good one. Also today, you can go to timingresearch.com, and I'm going to be on a panel of 5 different traders, and we're going to be talking about the markets, what we see going on, whether it's economic, geopolitical, or just the market in general, which direction we really feel that these different underlyings and the overall broader market's going to go over the next week. So check that out at researchtiming.com, and I hope to see you guys all there. It's going to be a really good one. That comes out in just about an hour, so if you can't take that, take it easy.